So welcome back to another episode of Forex Tech Magazine. It is your host, Lewis, and today is January 30th, 2019. Hope you guys have had an opportunity to make some money this year in the market, and if you have not so far, then stay tuned. Hopefully we give you some little tips, tidbits today that help you turn that situation around and hopefully it help make you profitable before this month is out. Maybe, I don't know. But at any rate, hey, before we get into that, let's get into this. Let's do the disclaimer. Disclaimer goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Nothing that is shared with you by Forex Tech Magazine should be considered to be financial advice. If you are in need of financial advice, then our suggestion to you would be to seek out the assistance of a licensed, competent advisor. So let's go ahead and get into what you came here for, which is to talk about some trading opportunities. All right, so let's look at this real quick. Let's dig into this. As you can see, I got some extra indicators on here tonight. What we're looking at here is the Great Britain pound, the zillion dollar, and as you may or may not be aware, currently in this trade right now. Here on this demo account. And what we talked about prior was the fact that price going up, bouncing off some of these support resistance lines, and that in order for us to purchase, we need to go ahead and get price to cross over this downward trend line. And as you can see, price has bounced up to it and it has been rejected a couple of times, and it is now bouncing off the support line, right? So we want to talk a little bit about where we're at, what's going on. Should we continue to stay in this trade, or is this a trade that we should be looking at to potentially ditch, right? And let's go back. Let's pull it down a little bit here so we can see the whole thing. This is the second sequence, right? Here goes the first one right here, A, B, C. Hit the extension, A, B, C, right? B extension is out here. So C pull back to the red. Remember, this stuff is color coded. So red to the red, blue to the blue, green to the green. Basically meaning if price retraces back to the blue, then where our target is going to be the blue. If it retraces back to the green, then the target is going to be the green. But in this case, prices retrace back to the red, so that means our target, our D, is going to be here in the red. And as you can see by this dotted green line here, that's where we actually got in at the market. The arrow points to the actual spot. So as you can see, price is still now price retraces back to the back to the 0.382. I think it came pretty close to hitting that D extension. Looks like price had hit some resistance here, and then it turned around and pulled back. Now, a big part of the reason why you see this pullback is because we said that there was going to be a vote on the Brexit again, and there was again a vote today, and the vote today was to not to delay the Brexit, right? So they're still on schedule to for that to happen, but the vote did come in that they need to go back and renegotiate the actual deal, and so that's why you're seeing a little bit of weakness here in the Great Britain pound. Currency pairs, but keep in mind that this all could change within the next 24 hours because of the Fed release that's about to come out over on the U.S. for the U.S. dollar. So that's definitely some major market news. I think right now it's kind of baked in that everything's kind of stay on course, but we're not going to get any, I think maybe one interest rate raise, if not zero. I gotta go back and double check, but pretty much everything, the information is pretty much baked in unless there's some type of surprises in the news release today for the Fed. I wouldn't expect too much of a market swing, but what we could do is wind up getting a rally here because now we're coming back down to a level of support. And as you can see, this level of support has held pretty well before in the past. I mean, price has kind of pushed through it before, right? But every time it's pushed through it, it's been able to manage to bounce back up out of it. And so we're back here, and as you can see, we're starting to form a green candlestick as we speak. Now, this, of course, is And of course, this right here, looking at the MACD and the RSI, the Relative Strength Index, and the moving average confluence divergence uh, indicator. Uh, this right here is basically a momentum. The MACD is basically a momentum indicator, so it's telling you what's happening, over the long term versus RSI. It's usually something that's really kind of giving you something that happens over the last 14 periods. So if we're on hour charts, it's looking at the momentum over the last 14 days or so, whereas the MACD is kind of looking at it over a longer term period. And if you're looking at it on the hourly chart, it's telling you what's happening in the last 14 hours, give you some indication of whether there's strong buying or selling that's been occurring over the last 14 hours versus the MACDs is a little bit of a longer period, right? And as you can see right now, both of these are kind of like in bearish territory, and that's only because ever since January 24th, the last 6 days, it looks like this thing's been steadily trending down. But let's look at this for a second on the daily chart. Remember what we've been talking about here lately is that to get an idea on the daily chart, right? As far as what's happening on the longer term charts, so that way it gives you more confidence when you're trading what's happening on the shorter term charts. And if we look here on the longer term, on the daily chart, we actually see that your MACD, right, is in bullish territory. And what we mean by that is it's over the median, right? So it's positive. And if you look here at your histogram on it, it's actually pushed over to the bullish side as well, right? So this indicates that we're in a upward trending market for the moment, right? Doesn't mean it's going to continue that way for forever, but for right now, seems like the pressure is on the buy side. They're buying up, so that kind of helps us understand that we may just be in a little bit of a retracement right now. Same thing here on the RSI. So over the last 14 days, it's been a lot of buying in the market, and as you can see, we're looking at the buying pressure here, right? Even though it may have dipped back here and there, it's over the 50, over the halfway mark, right? And since the runs over the halfway mark, over 50, that means that we have bullish momentum in the market. So with that being said, I'm not an indicator guy, to be honest with you. So you never really see me use these on the charts. I just kind of incorporated it in the day. Just thought it'd be interesting for folks to look at it and see. Another indicator, another technical analysis tool that you can use along with your trading, just to kind of get some confirmation, especially when you get market news and you get some abrupt pullback in the market, just to kind of see, give you extra confirmation to help you along with your trade. So, but anyway, just want to share that with you, and we'll leave that up for right now. But still, as I said before, right now this is not a buying opportunity. I mean, typically you could, if you wanted to, buy here off of the dip, right? When it's pulled back and it hit the support, but I'd be cautious of it right now. I really would, because I think that you could incur some additional losses if you did buy right now. Probably a better opportunity once again would be once price crosses above this counter trend line, because then you got some momentum going into the market, and the market is lifting you up with it, versus buying now and kind of waiting for the market to turn around, because you may still get some additional pullback. So I would hold off on this for the moment if you're not already in that trade. Great Britain pound, New Zealand dollar. We're looking at Great Britain pound, Canadian dollar. Same thing. It looks like it crossed over that barrier, that downward trend line, only to crash back down into it, right? So right now this pair is pretty. It's not something you necessarily want to be in, I don't think, at the moment. Once again, though, we got upward momentum. We're definitely on the bull side of things. And if you notice right here, overall, this pair is going sideways, right? I still think there's some upside potential here. to this pair, but I just don't know how much. And one thing, if you notice here too, if you notice the swing lows, right? They get a little bit higher, right? The swing low. This is basically the same, but here it starts to get a little bit higher. Just a little bit higher. Just a little bit higher. All right, so not a lot, but a little bit, and so that could be an indication that the market has definitely hit a bottom around here, and that it may be looking to start turning. Also, too, when we look at it, because we hit a top, but if you look at the top seems to be going up a little bit higher too as well. There's incrementally trying to get a trend going on here, but more or less it's still in a sideward trending pair. And remember we talked about when it's trending sideways, usually 70% of the time it's going to continue in the direction of the original trend before it started going sideways, and the original direction looks like it was going down. So be cautious, but look for those opportunities. Right now, like I said, the indicators indicate that there is still some bullish momentum in the market for these pairs. But use extreme caution while going in here and trading these. Okay. Here's another one: Great Britain pound, Japanese yen hasn't crossed over to the buy zone. Would not be looking to buy. Would be still sitting tight on this right here. Not looking to sell either. Just be looking to sit tight on it. Right. Daily chart. That's what it looks like. Yep, daily chart points to definitely bullish momentum that this thing could be looking to turn around at any moment. Hourly chart, okay. It looks like, of course, there's a pullback going on. So we want to sit through this pullback, wait till price starts making it move up, and then once it makes it move up, we'll buy in, we'll make money, okay? So remember, a lot of what you're going to be doing as a trader is just being patient, man. It's kind of sitting back. It's almost like fishing, right? There's a couple ways you can do fishing. You can go out there, seeing a guy today who's doing fishing with a net, right? And it's very active when you're doing it with a net because you're looking, you're throwing it out there, you're trying to get a bunch of fish at one time. And then there's the guy that's like myself that's just, casting a rod from a pier, just putting it in place, sitting back, drinking a soda pop or a beer, whatever it is you're drinking, or water, or whatever it is you like, and you just relaxing, you're just waiting for something to happen, right? Waiting for the fish to come to you. You got the bait in the water. You think you got the right idea for what bait to use, right? You think you got the right ideas for what fish is going to be biting, and then all you're doing is just sitting back out there, waiting for it to happen, waiting for it to come to you. Trading is a lot like that, right? You get your setups in place, you're looking at everything, you're just kind of waiting for it to come to you, waiting for it to develop. And then once it develops, boom, latch on, you make money, okay? So this is the hourly chart for the Aussie US, I'm going to say Great Britain pound, Aussie dollar. Once again, it's not anything you want to get into right now at the moment. Price went up and retested not only a trend line that was going down, but it also hit a resistance, right? So double the pressure, and price, of course, it rejected it and started moving back down again, right? If you look at this on a daily, and as on the hourly, of course, you see is everything's moving down. But we start to see some, looks like it's starting to kind of turn here a little bit because it's coming off of the bottom here on the RSI. But let's look. So it looks like some buyers may be coming back in the market, right? May have hit the proverbial low. If we look right here on the daily chart, we'll see that it's actually coming into buying opportunity, and that it's still bullish momentum, right? So daily chart saying, price is going to be moving up, and this right here is just a retracement. Hourly chart is saying that, confirming the same thing. We're in a retracement, and definitely not time to purchase right now at the moment, but that could change at any moment, okay? And the last one we look at is the Great Britain pound, US dollar. Kind of the same thing here. Here was the downward trending trend line. Price went up, touched it, got rejected by it, came all the way back down to this support resistance line. and price is held here. It's coming back. Looks like it's retrying that line again. And if you look here at the indicators here, it looks like that there was bearish momentum in these indicators, but as you can see, it's starting to turn around, kind of bottoming out right there. It looks like it may start to be a bullish indicator on the lower time frame. And if we look here on the higher time frame, then we're uh, definitely in a bullish pattern here, right? So essentially what we're doing is going through a pullback, and we're waiting for price to reverse. You guys get that? So overall, it looks like all these great grand pairs, still not a buy today either. Today is another day that you want to sit on your hands and just wait. Don't necessarily want to get to the market, right? You can look at it. If you feel like trading to the downside, I would be very, very cautious, my friend. To me, it's not worth it. I would just sit back and wait until price sets itself up again for us to have a buying opportunity. And then we'll look at our take profits and make sure they're still in line with our original objectives, which it appears they are. It doesn't look like anything has went to an extreme, went to the blue or to the green. Everything's still in the red, so that means our D extension should still be in the red. But like I said before, we'll know more about this over the next 24, 48 hours. Okay? So as of now, still say everything with the Great Brent Pound is a hold. Hold, hold, hold. No buys, no sales. Just hold it. Now let's look at our other pairs. Let's see here. Here goes the US dollar, Canadian dollar. Pretty interesting, even though this right here is crossed over to the buy zone, right? It's still a weak buying for this particular pair, which is kind of crazy. Because if you look at the MACD, it's still, even though it's crossover, it's still in the bearish zone. So right here at that zero line, that zero mark, right? That's pretty much telling you whether you should be in sell mode or buy mode. So we'll get some little confliction as far as what we should be doing between this indicator and this indicator here. Right? Actually, these two indicators, these three indicators, right? And that's why indicators sometimes can be good, sometimes they can be bad. So when you start getting confliction between them, it can kind of mess up your analysis on the chart. You start, you get that analysis paralysis, right? Where you start looking and say, well, what should I really be doing? All right. I will tell you though, above everything else, I'm going to use the fibs, right? And as long as I see that I'm pulling back to retracement, I'm going to be good on the fibs. But what this right here is telling me that this right here, I should probably be looking for better potential opportunities in the market. That's on my own personal opinion. When I start seeing confliction like this right here, right? And what I mean by this is because anytime your MACD is below the zero waterline, that tells me that we are in bearish conditions, right? And we should be looking for selling opportunities. Same thing when you see your RSI below the 50 waterline, it tells me that we are in bearish conditions and we should be looking for selling opportunities, right? This is what it is, right? So you got to be careful. This could be an early warning that this thing is going to go through your A, right? You're already here at the halfway mark, right, at the 50, right? So yeah, it's very telltale that this thing could go through the A because these other indicators that measure momentum, and this is basically what they're doing, they're measuring, the buying and selling momentum in the market, or buyers coming in or sellers coming in to the market over a certain period of time. It's telling me that there has been a tremendous amount of sellers in the market, and the market has been selling off as of late. That's one of the reasons why we got this pullback all the way down to the 50, and that got to be cautious because this thing could pull back a lot further before it starts to push back up again. So would be cautious about trading this pair. Still is a pair that you could get into. The other thing is too, because of the fact we're not looking to get into it until price crosses over into the buy zone, right? So we still got some more time for these indicators to get out of the bearish position, for more buyers to come to the market, start buying in, and give us added, confirmation that price is going to be moving back up. But as of right now, definitely this right here is a no-go. It's a hold. It's a wait and see. We'll look at it. I'm not going to mess with it. And here we are with the Australian dollar, US dollar pair. This particular pair right here, we are in the buy zone, as you can see. We're over the 50, over the halfway mark. All right, barely, but we're over it on the RSI, so it means buying buyers coming into the market over the last 14 days. Same thing here with the MACD. We're over in the buy zone, but it looks like here we are getting some sell-off, which we had, you know. And you got to remember the MACD and the RSI are pretty much what we call lagging indicators. So it's not like they're telling or showing projection of what's happening in the future. It just kind of gives you an overall look at what the market is doing now, what it has done, and that kind of gives you confirmation of what it could be doing in the future. So if you think about it like a wave crashing in, right? If you look out, if you look at the ocean, you see a wave, right? You can either see a big wave coming towards the shore, or you see a small wave coming towards the shore, right? But you see a wave coming towards the shore, right? So that's kind of what the MACD is. It's showing you what wave is coming towards the shore. Is there a huge wave of momentum that's looking to push price up continually, or is there a small wave of momentum that's looking to push price down? What's going on? And if we look at this right here, we got a wave that's coming in. Looks like price maybe pulling back some more, and based off of buyers not really rushing into the market, right? And as you can see right here, it's not like a big rush. It's kind of just been moving market just kind of moving sideways, right? And that's kind of what it's been doing. I mean, it's been moving in, but it hasn't been anything spectacular, any really big moves. We had a big move here, but then it's kind of like little small moves here, hesitation. Same thing here, small move, hesitation. But we're still on the buy side of things, right? And even here, even though price has crossed over, and it looks like it's going to be, get some downward momentum, which it has over the last 2 days, right? As of the day, it started to change and start to actually push back up, and that's only over the last couple of hours or so, right? Because of the news that came out about the CPI for the Australian dollar, right? Started pushing up around 7 o'clock. This thing could still continue to move down, but we think that we're in a good spot that hopefully during the American hour, and I don't like to use that word hopefully when talking about trading, but during the American hour, we can continue to get a push back up. If you look here at the indicators here on a smaller time frame, an hourly time frame, they're definitely in the bullish territory, right? It's showing that buyers are coming into the market, all right? And that we could theoretically expect to keep this price pushing up, right? At least over the short term. So we'll see. Right now, it looks like it's kind of hit the proverbial brick wall. It looks like it went back up, tested resistance that was there prior, and now it's having a little bit of a pullback. So that's buyers taking profit in the market, which that's okay. Don't really care too much about that. It's going to happen. What I'm more concerned about is that we are we're about 51 pips away from our take profit, which is good. Love that, and hopefully we can hit our take profit here within this trading period. So over the next 24 hours, we're looking to definitely God willing hit that take profit and be out of this trade and be looking for the next trade to get into. Right now at the moment, it's definitely not going to be that U.S. dollar. Canadian dollar, it just looks pretty weak unless something changes on that one. We may be looking though to get into the Great Britain pound US dollar pair. I do see some potential there, but some things need to work itself out first before we get into this one right here. Definitely some potential for this one here though. But we'll see. We'll see. There's a couple of pairs out there that have some definite real potential. But we're going to need for some things to work itself out before we look at entering into anything. Right now, we're just gonna play the sidelines and just kind of look at it. Um, let's look at, before we get out of here, we're bring pound is in dollar. As you can see, this this support line is starting to hold, all right, which is good. Looks like right now we got a 35 pip loss, so net profit and loss is about $235, so not bad. Just want to show you that real quick. But as you can see, price pull back, hit that support line, and that's another reason why it's important to draw your support and resistance lines on the market. Remember, I always told you, support and resistance lines tend to be U-turn points on the market, right? So if you know where they're at, then you kind of know what your expectation is for the market to make a U-turn. And once again, it just helps you get more confirmation and more confidence in your trades. Okay. So that looks to be good for right now. We'll see how that continues to hold us up. Because we are at the open of the London trading period. So if the Londoners are happy with what happened with the Brexit, right, and they see it as a positive, and people are willing to pour into the currency pair, all the better, right? And we'll see how this plays out over the next 24. Hopefully we push back over, get back over our buy zone, and get back to profitability. And then, like I said, push us back up towards our take profit. And we'll see. I think we got a good opportunity. I think we got a good opportunity to, especially seeing how what's happening in American markets. I think we got a good opportunity to hit our take profit here, which is going to cash us in on our live account. And I think we have an opportunity to get back on track in our demo account. So I think we got a good opportunity for both trades to work out well for us over the next 24. Anyway, guys, look, that's it for me for tonight. I am about to get out of here. I am pretty tired, and I'm going to go lay down. If you guys got any questions, thoughts, or comments, please feel free to hit us up at questions@forexstatmagazine.com, or you can hit us up at forexstatmagazine@gmail.com. Look forward to hearing from you. Look forward to taking your questions. Once again, this is Lewis. I will see you in another 24. Take care, and look forward to talking to you soon. Bye.